For a rally to be the real deal, you absolutely need those aggressive sectors leading the charge.
Let's look at a classic example from a past market top to see how this works. The S&P 500 was hitting brand new highs. Everything looked amazing on the surface. But the sustainability ratios were all falling. That was a huge tell. It meant the big money was quietly selling their growth stocks and hiding out in boring defensive names. It was a massive warning that the rally was hollow, and sure enough, the market topped out right after that.
Okay, now, contrast that with what's happening today. The S&P 500 is once again pushing to new highs, but this time, look at this. The sustainability ratios are rising right along with it. This tells us that money is flowing into the right places, into those aggressive growth-oriented parts of the market. It confirms that this rally has real underlying strength. It's built on a solid foundation.
And this really brings us to the main long-term takeaway from the analyst who actually developed this framework. Despite all the short-term wobbles and warning signs, his view is crystal clear. The market's underlying health is strong, and he's expecting it to head much higher as we go into the end of the year. So, the big question is, how do we square these two things? A risky short-term outlook, but a really promising long-term one. Well, this is where it gets really interesting, because that short-term weakness might just be setting up the next big opportunity, all thanks to some powerful seasonal trends.
Here's the key idea. Instead of seeing a potential market dip as a reason to panic, you can see it as a chance to get positioned for what's coming next. A little pullback would let you buy into some really strong sectors at better prices, right before they enter what is historically their best time of the year.
So, where are these opportunities? Well, this chart here highlights 3 areas that have incredibly strong seasonal tailwinds coming up in October and November. We're talking about financials, banks, and small-cap stocks. History shows this is their time to really shine. And the numbers here are they're really compelling. Get this, regional banks have been positive in the October-November period 83% of the time over the last 13 years. Small caps have been up in November an incredible 92% of the time. And hey, even Apple, one of those wobbly Mag 7 stocks, is about to enter October, which is one of its strongest months. These are powerful currents you really don't want to swim against.
So this is what it all boils down to. The market is sending us these mixed signals that are really testing everyone's patience. You've got these clear short-term risks clashing with some really solid long-term strength. So the real question for you is, if we do get that pullback, are you going to see it as a threat, or will you be ready to see it as an opportunity?